And welcome to My Finance Teacher. Let's have a look at gold today. Today is 3rd of January 2017, and gold has been experiencing this very nice run since the 12th of December. Within this daily cycle, new daily cycle, and within this new intermediate cycle that started close to mid of December, first half of December. And just as I mentioned in my previous video, gold is pulling back down from the resistance zone of 1320. And there are some indications that we might have seen a top for this daily cycle. The intermediate cycle is far from finished, so we'll see price levels much higher than where we are right now. However, in the very short term, maybe over the next week or 2 or 3, we might see gold pulling back down. What are the reasons for that? Well, firstly, the duration of the daily cycle. They usually last anywhere between a month and 2 months. So we might be close to the time when the daily cycle should give us its top. Besides that, the price is too far above the 20-day moving average, so we're a little overstretched on the upside. And besides that, the 14-day RSI is overbought, already in overbought territory, close to 73. So gold is getting a little bit overheated, and it might pull back down over the next week or 2 or 3 weeks. Right, so that's what we see on the gold chart. There is also something on the US dollar chart. It's going up today, but generally since the last video, as we mentioned, dollar is breaking down, down. So this daily cycle in dollar has started sometime in late November, and it's likely to continue for a couple of months. The duration is likely to be for a couple of months. Over a month has already passed, and we can see a trend line forming, downtrend line that looks something like this. This trend line is being confirmed relative to what we saw in my previous video, these parallel lines, and the dollar is bouncing right with these trend lines. So what we see is dollar overstretched too far below the 20-day moving average. The RSI has already touched the oversold levels, and we're at the bottom of this trend line. That all indicates to a possibility that over the next several days, dollar might climb slowly upwards. It's not gonna break through the recent highs at 94, because we're already in the declining phase of this daily cycle. Most likely dollar is just going to climb up to the top range of this declining trend line, and after that turn back down. So if that takes several days, a week or 2, that is exactly when we expect gold to pull back down from the resistance zone over the next week or 2. Okay, so where could gold pull back to? Right, let's have a look at what it has done in the first daily cycles of the previous intermediate cycles. Right, here for example is the first daily cycle of the previous intermediate cycle. Gold pulled back down to touch the 20-day moving average. Half a year before that, in the daily cycle, in the first daily cycle of the intermediate cycle, then Gold also pulled back down just to touch the 20-day moving average. Let's see if something similar happens again. If that happens, then over the next several weeks, gold might pull back down. Where is it going to pull back down? 1280 seems to be a little too low for an advancing phase of an intermediate cycle, although we are stretched quite far above the 20-day moving average. Another support zone is within this area rather than a support line. It is something like a support zone over here, although that seems to be relatively high, very close to where we are already. So if I stretch it a little bit like that, that's good enough, I think. Gold might pull back to 1300. That is a big round number. Those often serve as support and resistance zones. Additionally, there's another prior peak over here at a similar zone, so anywhere here is a support zone. If gold pulls back down into that zone over the next few weeks, over the next week or two, and the moving average climbs back up, that will allow them to get closer to each other. That will allow for the price to revert back to the mean and then start its next daily cycle as the 20-day moving average slowly rises. And that new daily cycle in gold, new rally in gold, will most likely coincide with the continued decline in the dollar within this daily cycle. And by the end of this daily cycle, we'll probably reach somewhere close to 91 on the dollar index. Excuse me. So that's the forecast. We could be a little bit cautious over here with gold. And for those who have missed the chance to buy some gold over here, this soon might be another chance to pick up some gold or shares of gold mining companies for the next daily cycle to take us probably above this previous high of 1360. Well, this is not an investment advice, and as usual, I do wish you luck. Thank you for your attention.